and welcome to Taking Stock on CNBC TV 18. I'm Ekta Batra and with me is Anuj Singhal. This is the show where we wrap up the action on the markets for the week as well as give you an outlook on what next week might look like. Anuj, it was quite a choppy week that we saw, but all's well that ends well?
All's well that ends well. I think this week was far better than what it looked like, right? I mean, because the Sensex and Nifty were only down 0.2 or 0.1%. In fact, Sensex was up for the week. That's because of the Friday factor. But I think the Bank Nifty, despite the Friday pullback, Ekta was down about 3%. The Nifty Junior was down 1%. A lot of mid caps and small caps suffered. A lot of portfolios took big hit over the last 1 week. Till Thursday, there was a bit of a panic low in the market. I think there's a good chance that the market may have made a bit of a near-term bottom at around that 8,000 mark, and the market may not revisit that. Of course, the proof of pudding is always in the eating, so that's something we'll find out over the next 2 or 3 weeks. But there's a good chance that we might have found a bit of a near-term bottom. Even if that means that the market now struggles at say 8,400, 8,500 and has to once again go back towards 8,000, but at least that free fall might well have been arrested. That's the sense you got. And while the earnings season towards the end is not turning out to be too good, but numbers like Lever would still give you some confidence that maybe all is not lost. And that's why I think over the next 1 week or so, the market may try to gain some more lost ground over the next 5 or 6 days.
But what is the next level that we'd be watching out for?
So I think 8,300 nearabouts, because that would also coincide with the 200-day moving average. So that's the level that I'll be watching out for. 8180 was the first level, and the Nifty actually crossed that and stayed above that through the day. So that was the good part.
And do you think it's going to be led by the Bank Nifty?
That's a tough one, because the banks...
a lot of the numbers are out.
No, we've seen short covering in banks, but the sense you get is that it will have to be something other than banks. So we'll find out. Maybe IT, maybe pharma, but maybe some other stocks. In fact, let's go close to our guests and find that out. Joining us on the show today, we have Nimesh Shah, MD and CEO of ICICI Prudential, and later Jay Bala of 1857 Advisors will also join in. Nimesh, hi, good to have you on the show. What do you make of the recent volatility, and as someone who heads a large domestic mutual fund, how do you view the current situation where FIs are selling and DIs are buying on a daily basis?
Actually, we are quite happy with the volatility. If you ask me, we always look at volatility as an opportunity. In fact, we have got set of funds which only work on the benefit of volatility. I think in India, whenever FIIs have sold, historically if you see, whenever FIIs have sold for some technical reason or problems in the West, when they have to sell India, that is the best time to buy India. That's what we have always felt. And if it is proved historically that whenever FII is sold, if one buys, there is a good chance of making it. So this technical correction was very good. It will remind investors also that there is risk in the market. They need to be careful when they are investing. They need to get their asset allocation right. And as a fund house, we have always had this view. Whenever we have come on CNBC or any other channel, anywhere, we have said that 2015 we expect lots of volatility to come because of international factors. And if volatility is because of international factors, invest throughout 2015 to make money in 2018. That has been our stand even 4 months back, and that's what we have been saying even today. So this correction to 27,000 looks very healthy to me.
Okay. Nimesh, hi, good to see you in today. You probably benefited from a lot of opportunities this week in terms of a lot of stocks looking quite valuable in terms of valuations. Which were the sectors that you possibly nibbled into?
We have been we are going overweight in technology. During the week you have seen that we will go overweight on technology. We are overweight on private banks. So those are the sectors that we have liked. Technology, we have given a big call to our investors that please invest in technology. Technology has corrected more than 10% or around 10% in the last 1 month. So technology companies, we believe with a strong dollar and Western world doing well, technology companies are set to gain. So we believe this correction in technology companies since last 1 week is good. And private banks we have always been bullish about. And see, the nature of our funds are such that since we take a cash position, whenever the price to book ratio of the market goes down, we go out and buy. That's some of our funds are structured that way. So technology, banking are the sectors that we are overweight on.
Okay, Jay Bala is also with us. Jay, hi, good to have you on the show. What do you make of the Friday pullback? And is that indicating a bit of a near-term bottom formation, or you won't be that sanguine on the market?
Yeah, hello Naj. See, when we spoke about the markets in February and March, we were talking about raising cash when the markets are approaching the 9,000 levels. And on the day of Raghuram Rajan's cut, we were saying that the market is starting a big correction, and the 10% correction that we saw through had actually come through, and we were one of the very few guests in your channel who said that the market will break 8,000. The move to 7997 in fact works very perfectly with the technical structure, and it's very likely that it's put in a durable bottom, and this bottom is very likely to hold from a technical point. But from we have other factors to retrade this view. You know, whenever there's a bearish move on the market and fundamental analysts come up and are able to spell out A, B, C reasons, it's very high probability that since it's a bearish move, they're able to spell out reason why the market could go down. We have even heard analysts say 7,500, 7,000. So it's a very high probability that the move has seen they're talking about the move that's happened in the past. So I'm of the view that the markets are heading for fresh record highs. 9,100 will go, and there's a very high degree of probability that we should adopt the adage, buy in May and go away.
Okay. Jay, so if you are envisaging 9,100 or maybe even surpassing that level on the Nifty, give us a sense in terms of a timeline that you'd be working with, and which would be the sectors or the stocks that would lead it higher?
Yeah, I think the Bank Nifty is going to lead the way once again. It's been that's one sector that I'm positive on, and within the banks, I'm positive on the private banking space. And if you look at the BSE oil and gas space, the 9,000 level on the BSE oil and gas space is a very important support. I think that's going to hold, and if it were to, if we had to see a follow through on Monday, I think there's a very high degree of probability that this sector is actually turning around. Also, if you look at the BSE FMCG index, the 7,500 on the BSE FMCG index is a very significant support. And if you look at individual stocks within that space, like ITC and HUL, they're also looking like they are set to turn around and head towards record highs. So these are the sectors and individual stocks that I'm positive on.
Okay, Nimesh, let's talk about the consumption space. We've seen we saw levers numbers. Of course, we'll not get into individual stocks, but we saw levers numbers. They looked quite good, and the market rewarded that. But overall consumption pattern has been showing slowdown. Whether it was reflected in Titan's numbers, or whether it was reflected in Hero MotoCorp's numbers. What is that telling you about the overall consumption growth and overall earnings growth going forward?
We have been always bearish and underweight on consumption stocks. So when somebody asks me whether 1 year back or even today that what are we underweight on, we have always said that consumption we are bearish on. I think what we are seeing today is a transition that is happening in the economy, where essentially a consumption-led economy has to at some point of time migrate into an investment-led economy. So while the consumption has to come down, so consumption is something, whether I understand, I have seen HLL figures for the day, but overall we have always been underweight consumption in the last 2-3 years, because we believe they are expensive stocks. Most of them are 40 or around 40 P, and we find them expensive.
Nimesh, I just wanted to concentrate a little bit on the earnings picture which Anuj alluded to. We heard the PNB management talk about how majority of their restructured portfolio, in fact, I think 40% came from the infrastructure space. And we have all the infra companies to still report numbers. How bad do you think it could look?
Infrastructure is one sector which has to again, since we are a mutual fund, we would be on a 3-year call. 3 years, we believe if somewhere we are getting stuck or our call is going wrong, it is on the infrastructure space, because we had given the call 6 months back also, nothing has happened. Till now also, we believe the economy has bottomed out. Nothing can get worse than what it is happening right now. So, but the good thing is financial macroeconomic factors are good. So at some point of time, huge government spending has to come. The private sector is not investing. The government has to invest and bring the cheer back, or bring the economy back on rails. So we are waiting for the government to invest, and I think that we should see it by the end of the year, that government has to invest big time, because private sector is not investing. At that point of time, I believe infrastructure. So if you have got a 3-year three-year paradigm, then infrastructure sector is good. Having said that, the challenges in the infrastructure sector has not gone, and we are not very bullish about the results that are going to come in this quarter.
Okay, time for a break now on Taking Stock, but let's get in some market opinion we heard through the week.
We think the market's going to head straight back up to 8,500 on Nifty very quickly, because, you know, I think all the negatives were played in. Oil price looks as though it's coming lower, and really we've kind of reflected what's been going on outside of India as well as inside India in the last couple of months. But don't get me wrong, it's still going to remain volatile over the next few months, but 8,500 I think is the next stop for the index.
This market always has a tendency to move in a pendulum. When it's optimistic, it just moves to the euphoric high, and when there's a market go on a bit of a negative or a pessimistic, then everybody tries to jump off, and correction is very sharp. I would not be surprised if there are some long-only FIs who come back to buy because they'll find valuations attractive. Whatever these things have happened about MAT or reforms that we are talking about, I don't think they've changed the fundamental story about India.